Maximus Analysis here for July 7th, 2016. And again, we will look at the intraday 60-minute because we had basically an indecision day on the daily. And I'll show you that right after. So we are right at a pivotal point. Again, we told them, or we put these lines of support regarding the pivots yesterday. At this level here was around 2082, which is a level that I spoke about. I actually tweeted it out and said, let's see what they do there. They ricocheted off of that going into the close, but again, we have a job support number coming out tomorrow, so we'll see. It should move the markets one way or the other. What I did want to talk about was something that I want to ensure or make sure that we never do as traders. Okay, and I got a comment on one of the trade on the yesterday's video, and it just talks about, you know, the corrections that we've seen, and it makes complete sense. We've seen 1 to 3%. We've not seen any corrections similar to 87 or 2008 in a long time. It seems like things have been grabbed up every single time for the dip, quote unquote. Now that we've been sideways for so many years, and using that type of language has not been reckless. If you can look back here, this is basically July of 2014. So we've been sideways for a couple of years. Yes, we have had pullbacks into this region that we've talked about. This is the dollar amount, again, around this 1875, which we'd want not only to be violated, but to close and then close below this 1805 level for at least 1 to 2 weeks before we would declare, okay, we're in some type of bear market. Now, with such a powerful move last week, and you can see it from the Brexit, that we have not really had much movement at all going this week. But what I never want us to think is that a correction, we could use the monthly just to kind of give some type of correlation. A correction going into 2008 of over 10% cannot happen. We will never try not to use or make an assumption regarding language of that type of nature, because they can always surprise, and it's something that the reason why I don't want you to do that type of language is because I want to make sure that if that correction does happen, that you're thinking through that mentality that they'll never happen again. You load the boat. When you buy the dip, you're seeing a correction to 1800 and you're like, I'm all in. I'm putting the whole account in because they're going to give another epic bounce like they did before, and it won't happen. So let's say they go all the way down to 1800 and they go to 1700 and they go a little lower, maybe to 1650, then come back up. Your account will be blown up, and you gotta respect this game enough to say, listen, it's the all right, I'll give you another example if you don't mind me just looking at this. So gold. I went to a financial symposium at Duke about a couple of years ago, and he was talking about gold, and I told them I thought that gold was a short. Okay, this was, yeah, it's around this time frame right here. I said, I think gold's a short, and there was a guy there that was like, I would never short gold. And when I, of course, I gave him a little call back, like, or email, like, hey, what was that talk? And he was like, I haven't been trading for a while, and because again, I was, I went to him and I said, listen, it's setting up for a short. It looks kind of short. And this is the monthly chart. So again, even if I go back to a weekly chart, you could see that same type of, movement around 2012, where I was like, all right, this is not looking healthy. It's been sideways for a while now. But it's the talk. It's not that he was right, I was right, and he was wrong, because I could have been wrong. But the talk of things never going down or can never be stopped again, or just try to make sure that you don't do that, because it's not that I want to be right. Again, I don't care to be right. I don't care to be wrong. There'll be times that I'm wrong, and that's a part of trading. If you don't want to be wrong with trading, the only way not to be wrong with trading is to not trade. Okay, it's something that you have to manage risk and accordingly, but I want to make sure, at least for the people that watch, subscribe to my newsletter, subscribe to my news channel. You guys have been watching for years. The last thing I want you to do is to say something could never happen. And because majority of people I know involved with the markets are not trust fund babies. They're not guys that, their parents will send them, a couple of million if they blow up an account, or give them another 70,000, 80,000 to start with. Now, if you're in that boat, fine, congratulations. But for the majority of people, you might bust your ass to get this money. And that's the reason why I started this channel, is that if you bust your ass to get this money, the least you could do is respect it. Okay, if you want to go gamble, go to Vegas. This is not what this channel is about. It's not what my newsletter is about, and that will not be what my potentially my service will be about. It's basically giving honest stock market analysis for all time frames and a lot of different markets, and giving an unbiased, personal, no BS type of analysis and product. Which I provide with these newsletters and with my videos. I have over 570 videos up, and I make sure to bust my ass to make sure that I get something out to you guys every day, because there might be a guy starting out 1 or 2 months into trading that is getting his ass handed to him, especially in a choppy market like this. Or there might be a guy that's a veteran that's like, I don't get it. Like, I'm just not getting the consistency because the market dynamics have changed a little bit. But either way, I just want to make sure that we were talking about that. So I'm sorry for my little rant, but I feel it's important. So let's look and see where we go for for the end of this week. Again, we don't want any type of closes near 2040. If the news is bullish, it just continues this bullish candle that we've had from last week's rip up. Again, looking more on the let's look at the 120 tick chart. We can see that they have the support right now. They need to hold this 2080, 2082 area. Let's look at the NQ, and we could get similar type of feel that, again, they have from the Brexit, they have a higher low in place. But on the weekly time frame, you can see that they're in this pendant that we've been talking about, and they're going to break one way or the other. It's just where they're going to break and not false break. So looking at the daily time frame for the NQ, we can see that they did have some false breaks, get right back into the channel, and now they had another false break, and we have to see, now that it's against resistance, if this is going to be another lower high. So a lower high, lower high, lower high. Where we're going to go tomorrow, I don't know. We'll see what happens tomorrow during the jobs report number. YM, again, we're right where we've made this midpoint of the range a significant place, and you could see why. Again, you can see how many times it's came up a little bit, broke above, stayed as support, close, came up again, ding, ding. So again, this is an important number, and this has been a while. So this has been a while. People have been watching this type of movement. So we'll see where we go from there. Crude had a pretty nasty day today, and again, I did tweet that I did close my USO puts, and I'll tell you the reason why. I've been short this. Usually I'll go short another vehicle, maybe the options on the crude or something. But I tried the USO puts. I was short from here, like probably 49.50-ish, because remember, I trade the weekly time frame. So I was short for weeks on the right hand side of things. And I tell you this, it was around here, and I was like, all right, I should be, up a couple. I'm up about $3-4 on the underline and whatever. They were up 5 cents. I said, I'm just going to close and I'll find something else. So again, we'll see if they hold this area right here, because this would then provide what would be looked at as like an inverted head and shoulders. So if you look, oops, let me try that one more time. So we'll see if they hold that support, because if they touch that 26 area, we've talked about when the time was convenient that they could go to 25, but potentially 13. I don't know if that would be the case here, but you see the inverted head, shoulder. If they came back down here, we'd look for something like that to be some type of head and shoulders type of pattern. But again, we'll see what happens. There was not a lot going on with when you have this type of sideways movement on the ES, and this is the daily for the ES, it's an indecision, it's a doji candle. When you have that, all the underlining is not, there's just going to be a lot of nothing going on. Again, you have, let's look, Amazon, pretty much up, continuing its up, making higher low, lower high, higher low and a higher high as well. But again, seeing where they go. What I will look at is also for gold. if it's going to pull back a little bit. So we'll continue to watch there. Also, TLT is still kind of moving with some type of speed. We'll look again. Everybody wants to short it now, so I don't like to do what everybody else likes to do. So we're going to continue to watch that one from here. But I kind of understand why, because it's so many days up. But we'll see what happens for tomorrow. But again, I wanted to, talk specifically about making sure that we don't get not lazy, but complacent in regards to saying that prior moves cannot happen again. This is the markets. If it was so organized and rational, everybody would be making money. Everybody would be able to buy the dip. But now that you've had this type of movement, going back to the ES on the weekly, don't let it get you to the point where you start forgetting, that this thing could fall like these prior falls before. So 1999, 2008, and now we're all the way up to 2016 with some similar type of pattern. So let's make sure that we don't get a little bit complacent in regards to saying that this cannot happen because they've been buying the dips so frequently. When we start getting that type of movement, they want retail, as weird as it sounds, they want retail to feel like that. So when they have liquidity, if they choose to sell it off. So we'll see what happens tomorrow. And again, if you don't get the newsletter, email me at MaximusAnalysis@gmail.com. I'm going to get my website up, at least version 1, so I can, you have something to post some stuff up to, and by next week, hopefully. So take care and trade well.